To remain updated with the latest business news, click on the bell icon.
So much talk over crypto tax, but what does it really mean for India's crypto investor, the young crypto community of India? Also, is there a difference between a CBDC and a cryptocurrency? All that and a lot more. I'm your host Aayush Ailawadi. We'll be decoding crypto for you on this episode of Tech Today. And to get a sense of what that crypto tax announcement is all about, how will this actually play out, and what are the concerns of the crypto community, the young crypto investors that everyone keeps talking about here in India? Well, we've got a stellar lineup of guests. Badri, Harshal, Anush and Pareen. It's good to have all of y'all in our work from anywhere lives, all under one roof here on Tech Today. Badri, I'd like to start off by asking you, the crypto tax. Now, we've had all the news channels and news shows talking about this crypto tax. If you could simplify it for us, and because you understand not just tax, the law, you're a student of the law, and of course you understand the tech world as well. So given the nature of what cryptocurrency is like, and the blockchain and the decentralization, can there really be a tax, or is there a way for the taxman to really bring the crypto investors into the tax net in theory and in practice?
Thanks, Ayush. I think like you said, you kind of put the boomerang right at me. Somebody who kind of loves tech, tax and law, this cryptocurrency and this entire tax on it is very interesting, at some level amusing for us to see, right? So we were talking at one level about whether to ban cryptocurrency or to keep it, and before you know, you've got a taxation on cryptocurrency. At a very simple level, what the government is trying to do is that they want to impose a 30% flat tax on cryptocurrency. The only expenditure they want to give is the purchase price of the cryptocurrency that you're going to be either selling or exchanging. So it's not just the sale, even the exchange or any transfer of one cryptocurrency to another is going to be taxed. And then there are, of course, tedious provisions to kind of figure out who's selling and who's buying. And then, of course, they've got a very wide definition of what a virtual currency is, what they call as a virtual digital asset. So in sum and substance, they're trying to tax this entire area, which is cryptocurrency. But I think it's, like I said, at some level, as a tech person, I find this amusing. It's more like taxing spirituality, okay? So you can tax the palmist and the sadhu, but the real people who are like on the edges of tech, okay, it's going to be almost impossible to be able to cover them. But that's what it is, right? So this is how they have thought about it. I think it's a place where they want to start from. This is not the end of what we are going to be with. So this is like, baby steps into trying to figure out that we can tax an area. And I think the thought process is that the retail investors, the ones who are investing every day, they are trying to kind of protect them at some level by saying that we'll impose this tax and protect you in this. It's a discouraging move for a retail investor to have to pay high amount of tax on this. But I don't know how the institutional investors or those who work across different borders are going to really operate out of it. But that's my 2 cents on this tax.
Pareen, I want to come to you since Badri brought up a very valid point, something that I've been listening to a lot on social media and somehow it's not made it to the mainstream media. This whole distinction between retail investors and institutional investors, and these numbers which the regulator seems to talk about, and then the government says something, and then on social media exchanges say something else. The young crypto investors, this very cryptic term of millions that exist apparently in India. How many of these, according to you, and you've worked with the exchanges in the past, and of course you understand the tech behind it really well, how many of them, if you were to ascertain, I know it's a tough one, but how many of them are actually using these exchanges, complying with KYC, and how much of that money is really in the global markets and from India with the institutional investors, the big boys really, who are investing in other markets or even looking at other ways of really parking their money outside of the tax net?
I think you raised a really relevant point here. When we say young Indian millennial investor, that's mostly retail traders. Of course, the numbers are really high. We know that they are in millions, and these are young folks who are trading, but the ticket size per individual is really low. When we look at large ticket sizes, traders who are actually running funds on top of it, or who are doing some kind of serious margin trading on these markets, because the markets are global, they need frictionless on ramps and off ramps, right? Which doesn't happen very well in India as of now. If someone was doing a serious fund in India, you just couldn't convert from INR to Bitcoin, Ethereum, USDT that easily if the volume was really, really high, and you couldn't afford to do that. So most of the institutional investors, I would say, are trading in the global markets directly. Also, India has a premium. There's a price differential when you look at Bitcoin's price or a USDT price in India. Ideally, you don't want to deal with that. So institutional investors are actually probably already trading in global markets. Retail investors, yes, of course, they don't mind this, and they have been trading in the Indian markets.
How do you really view this? Is this 30% tax that Badri was talking about that sent shockwaves across the cryptoverse? Is it that bit too much when it comes to being a deterrent? Because largely when you're looking at these big companies or even the startups that you work with, what's the sense that you're getting from your conversation, Harsha?
Overall, it's extremely positive. India's flirted with the ban for so long. The fact that they're coming out and wanting to tax it actually legitimizes cryptocurrencies as an investable asset. There's some what we call FUD around the whole India crypto scene. I've been fortunate enough to be an early investor in CoinDCX, and this has been a hindrance in their growth throughout their lifespan. But now, government coming in and wanting to regulate, it's a definite step in the right direction. It is bittersweet. 30% is quite high, especially removing any kind of short-term and long-term differential. It incentivizes more folks to actually hold their cryptocurrencies rather than exchange or kind of realize their gain. And it also kind of indicates that this is step one. We'll see these different kinds of tax reformations come about slowly over time, and similar in the US. See what happens when you're purchasing through a centralized exchange and then you're bringing your currency into a decentralized wallet. Very hard to track. And in fact, in the US, it's a lot of self-reporting. How are you going to really mandate that? And in fact, you're seeing large crypto investors starting to relocate into areas like Puerto Rico that have different tax laws, and then they'll redomicile. So we'll see those types of issues kind of arise. At the same time, it's a huge, huge deal, and it's a positive step, and there's no denying that.
When crypto enthusiasts have added to this narrative of the tax coming before the regulation, does it legitimize cryptocurrency or this larger crypto universe in India? Is this a way of the government acknowledging that cryptocurrencies exist and we'll need to learn how to live with them? Do you think that there is some sort of sanction that or some sort of legitimacy that they've gotten post this announcement?
So first and foremost, just by taxing this does not give it legitimacy, because as you know, we also tax black money. Okay, that does not mean it's legitimate, right? So we also have other instruments that we tax which are not considered as legal, smuggling, for example, under customs law. Okay, but what Harsh was saying, the fact that there is a recognition today that there is a large number of people who are trading in these assets, and these assets per se are not bad. Okay, where their real concern is that the retail investor should not get shortchanged in the entire process, and the government having to come and rescue them at one level. I think the CBDC, for all its worth, which is like a digital currency of India, I think that gives it a little bit more legitimacy with respect to this. But just because they have taxed it, at least in the eyes of the Indian regulator, may not treat it. But if you look at the overall scheme of what they're trying to do, there is something where there's a recognition that just outright ban on this will not be there. Like I said, I don't think this is the last word on this, and I agree with Harshal that 30% is a very high rate of tax.
Anush, I want to get your take on it. Given the decentralized nature of blockchain and crypto, how difficult is it going to be for the Indian government to tax and then regulate crypto?
Sure. Aayush, let's really break this down. How the technology works is, instead of banks maintaining ledgers where transactions are recorded, for example, if I were to send you money, a bank would deduct 100 rupees from my account and add 100 to yours. Now it's just a bunch of computers all over the world which are doing essentially the same thing. Now, banks being regulated entities and obviously being licensed by the central bank, there is a lot of supervision. There's a lot of visibility when it comes to what transactions are being undertaken. All banks undertake KYCs. But when it comes to being able to transact just based on the internet with anybody in the world at a fraction of a cost, at multiple times, at a fraction of the time as well, you can literally be transacting with anyone just by having an alpha numerical key of characters, which is basically a private wallet. The amount of visibility the government has is very minimal. Compliance will stem from self-compliance, number one. Number two will stem from all of the marketplaces, all of the facilitators, all of the centralized service providers who are providing on-ramps and off-ramps to anybody who's becoming part of this ecosystem. In a number of countries, most regulators have sought cryptocurrency exchanges as the gatekeepers because they are the ones who actually record data of all of the customers who are coming into this space. So to a large extent, it is these centralized bodies which will help the government. But apart from that, as you mentioned, there are a lot of folks who believe in the idea of decentralization, who believe that currency should not be controlled by the sovereign, but they'd rather have it controlled by a bunch of computers, because you can really rely on computers to feed algorithms, to process algorithms. So those folks can choose not to disclose. It's very easy not to disclose, but obviously at some stage regulators will start criminalizing non-disclosures because they want full visibility, and that's where there will be a true battle of whether you can really live in a fully decentralized system without the control or the oversight of the government, or you have to sort of marry the two and still live in harmony to some extent.
And also it's crazy, guys, that we've been living in this work from anywhere world in the past couple of years. So we're all really relishing the prospect of perhaps living somewhere else and then flying back to India as much as we love it over here. Pareen, is this really compelling a lot of bright young minds from India to find more favorable places to set up and continue working in the cryptosphere?
I think the larger debate here has become around trading, whether trading will be allowed, whether people will book losses or profits or capital gains and stuff like that. Actually, the larger game that is to be understood here is that countries are competing with each other for talent now. We know that Web3 is much larger than crypto. Like, crypto is just an asset. What Web3 enables is much larger. And this is where a company that is $10-15 billion worth is being built in 2 years, 3 years, compared to Web2, where these companies used to be built in 10 years. Right? And for the first time, there are Indian founders who are selling their products in the West, instead of just Western companies, Western software giants coming to India and selling their products. This is a unique opportunity for India. And if we just take an example of something like Portugal, they've just abolished tax on crypto gains. Even if we look at closer to home, Singapore has given a 11% tax slab for crypto gains. The reason these countries are doing this is because they know that we need to be competitive on a global stage to attract this talent that you said is very mobile. It's not just work from home now. It's just everything has become so conducive for people to move and for businesses to be registered. What Balaji said last year is that there will be a time when a person is staying somewhere, their company is registered somewhere, their employer is somewhere. There'll be 5 jurisdictions that they will be connected to, and we are moving towards that kind of a world. When this happens, I don't want India to lose its edge. This is our chance to shine and attract global talent. Why can't we make the Silicon Valley come to Bangalore instead of have our founders go there and become the Sundar Pichais, right?
Interesting. Anush, do you think this is a concern when you speak to your clients? Are a lot of them considering and mulling over setting up abroad?
Yes, definitely. The level of regulatory risk that has existed in India, although which it has come down in the last couple of months since the government has softened its stance. But since 2019, there were these rumors of a very draconian bill coming into play, which would have criminalized holding cryptocurrencies to the extent that you might be jailed for 10 years. It has ensured that a lot of the founders or a lot of good companies have just moved to more favorable countries. As Pareen mentioned, Singapore is one, Portugal is another. The Middle East is coming out to be the crypto hub of Asia, and it's not only that, it's also a lot of investor comfort, right? Most investors are not comfortable investing in a India domiciled or India headquartered company. While the company could be set up in any favorable geography, the company could still engage with a lot of good Indian talent through freelancing contracts, through employment agreements or the sorts. But the question is still remaining that will India come out with a broader regulatory framework which really promotes companies or projects to set up in India and bring all of that foreign investment that could potentially come to India, but is still seeking, refuge elsewhere.
Badri, this is oddly reminiscent and gives me a sense of nostalgia to conversations we've had before about Indian companies listing abroad and retrospective taxation and these sort of concerns. But you've understood well the tax system over the years, and also you worked with the regulator on several things, right? So even fintech. I just want to get your take over here, because this conversation with one short budget announcement, which everyone seems to be talking about, 30% tax and TDS and no offsetting, this is a very small conversation which is sort of send these shockwaves across the crypto universe. Should we start talking about, well, the traditional company law sort of aspects of it, or corporate law aspects of it, with place of effective management and FEMA provisions? Are these the real sort of the sort of concepts that need to be discussed when we're talking about crypto now? And will they apply?
I think you make a very valid point. And I think, like you said, whenever I speak to regulators, they're trying to solve a particular problem for that issue. And they typically will not look at the entire ecosystem. And they're trying to kind of, they don't want to go, they're unsure of what's happening beyond their mandate. So like first and foremost in crypto itself, there's a lot more discussions happening behind the scenes than we all see. So there is a lot of concern from RBI. There's a lot of concern from other regulators. There is at some level an existential kind of issues with respect to something which is so easily which can go across borders, especially in a country like ours where we have strong exchange controls, for example, right? So we're an exchange control regulated market. What Praveen and Anush and others are saying is that, unless you solve all the different pieces, just by imposing tax on crypto or not imposing tax is not going to attract. And I think this requires a much larger discussion, because like I said, crypto is just one small part of Web 3.0, metaverse, and everything else just coming through, right? And over the next few years, we're going to see this completely expand and blow up and disrupt, right? So if India is not there catching these things, and we're going to have, we're looking at really taxing very small buckets or holes in this, we're going to miss the larger picture, which is like, can we get billions and billions of dollars of investment into the country vis-a-vis taxing, a few $1 million of, assets and things, and kind of making it difficult for the, the investor community, the startup community, the founder community, the promoter community from progressing in India. And today, once you become a little big in India, you're always going to have one eye on the rear view mirror saying, is there a regulator coming after me? Is there something which I'm going to have a problem? I think solving those are going to be much, much more important. At the same time, understanding how the world is moving is very, very important. I don't see, we again keep going back to the same set of people who understand the traditional world, not the intangible world as we see it. And I think that's where sometimes the issues come up with respect to what we should do vis-a-vis what we end up doing.
Something tells me that no matter how long we go on with this conversation for, that it is such a nascent industry, and it's the new age, right? So I think we should continue having these conversations here on Tech Today, of course, and continue to do them like Pareen and Anush and all of you all have been doing on Twitter Spaces, also on all sorts of drop-in audio engagement platforms. We should start a podcast just talking exactly about this, because there's so many things to share. Guys, thanks so much for joining us on Tech Today, and we hope that we can continue to have these conversations in the days and months to come. Guys, I really appreciate that you joined us on Tech Today and discussed these elements of crypto which haven't necessarily been covered in the media before. This was a fascinating conversation, and we really appreciate you guys for taking time out and joining us on Tech Today. And we appreciate that you were tuned in for this first segment, but there's a lot more. This, of course, was a conversation on the crypto tax and what's happening in the cryptoverse, but there's a confusion amongst a lot of people on social media and, of course, in the crypto community about how this CBDC will work and how different it is, if at all, from cryptocurrencies. That and a lot more on the other side of this break.
If you like the video, do like, comment, share and subscribe.